Good morning, traders. It is Monday, March the 9th. Taking a look at the charts, we've got continued craziness in the market. We saw this coming more or less a week and a half ago. We got out on Friday once panic and bonds, everything went skyrocketed. And more or less, cash is king, and that's where we are. Look at the markets this morning; they are down. The futures opened up last night sharply lower, sold off over 5%, and the U.S. equities markets hit a circuit breaker, so they have halted trading. So more or less, we're flying blind without the futures. If I was to pull up the futures intraday chart here, if you just take a look at, say, the 10-minute, you can see price opened lower, sold off, continued to go low, and then hit a circuit breaker. Now it's flatline. So more or less, the ETFs are moving. If we looked at the SPY in pre-market is still moving and trading. It's the futures that are halted right now. But when regular trading hours open at 9:30, during regular trading hours, that's when a new set of circuit breakers are going to kick in, which were implemented after the May 10, 2010 flash crash. More or less, if the stock market drops a couple more percent, so it'll be down 7%, the stock market will halt for 15 minutes, which to me isn't really a whole lot of time. It's actually just some time for more people to panic and hit the sell button when it already opens. But then again, there'll be another circuit breaker at 13%. If the market was to fall, markets again will halt for only 15 minutes. If the stock market falls 20%, then it will halt for the rest of the trading session. So those are the new circuit breakers that were put in 2013. None of them have ever been hit before. Hopefully we don't hit one today. This could be a huge exhaustion gap to the downside. Hopefully the market recovers and doesn't continue to bleed out, but it seems like momentum here is pretty strong. If you look at this drop in the SP 500, it's down 6.4% right now, actually probably 6.5, about to hit new lows. This is seen as a bear flag, so technically we could see the second half of this move take place, which would be a 13% drop, which could hit, we could hit two circuit breakers today, potentially. So overall, not a good day. Markets, it's going to be epic selling. Probably going to see the VIX. It could, hit 70, 90, maybe 120 like we saw back in the '08 crash. Could be huge volatility. And hopefully this will be some type of washout low that takes place. And generally selling at these big panic levels isn't the best time to do it. But again, there's a lot of damage being done this week. If things get really gnarly, we could start to see some overseas indexes start new bear markets with technical breakdowns, and the U.S. market here could start to could actually turn into a bear market sooner than we think. Instead of it being months out, it could only be weeks out here. So that's where we stand. Now let's take a look at the safe havens. The money's flowing into bonds. Bonds is the main thing. You can see bonds last night just skyrocketing higher. I don't know what that jump was. Let's just take a look. Let's go back to the daily chart and go 1440 for minutes. Let's just take a quick look where bonds ended up fully spiking. They have pulled back quite a bit from the high, but more or less from the previous session's close to this morning's high. Bonds up 3.88%. But if we take a look at TLT, this is the one actually I wanted to look at. TLT this morning is trading higher. It was up 9.55% at the high. It's going to be a big gap up, almost 10%. This is what I talked about on Friday when we close this trade out. This is the type of price action we could see. It could pop 5 or 10%, or it could drop 5 or 10%. This is where the markets become really unstable, and it's just a crapshoot. You got to be very cautious. This is why we take our money off the table. We let the market do its thing. Whichever way it's going to go, it's going to be wild, and we're going to let things settle out. We'll look for new trades when the time comes, but we are in this parabolic move, and what goes straight up usually comes straight back down. And this type of move that it's hit, I've only ever seen it hit once before, this percentage gain. So we're very close to having a very sharp pullback going forward, especially if they come out with a cure for coronavirus. Man, we're going to see everything fizzle out. Stock market's going to rally. I mean, all we are is one piece of news away that there is some type of cure for the COVID-19, and it'll be a night and day difference from what everyone's freaking out now to everybody piling in the market. We're all saved. We're not going to get sick. So it's going to be pretty extreme if that news comes out, more or less when that news comes out. Okay, let's go back to the markets here. Let's take a look over at gold. Gold is up. Gold did have a pop, nothing significant. It popped up to the 1700 area, pulled back. Metals got hit with, I think there was some pretty strong wave of selling, potentially margin call. There's a wave of selling. It pulled back. It's really underperforming. The true safe haven is simply bonds at this point. Gold only up 0.25%, nothing significant. Silver got hit pretty good though. It was down over 5% this morning. It's bounced up a little bit. It's down, or maybe it was down over 3%. It's down 2.6% right now and bouncing back. But overall, again, silver is not seen as the full safe haven in the miners. If we looked at the miners, and let's just make it so we can see this morning's price action. Here is today's bar. You can see we're set to gap sharply lower by 3 or 4 or 5%. It was down 5% earlier this morning. So yeah, so about 4 or 5% lower. So the safe haven, bonds, and gold barely is hanging in there. If we take a look over at energies, natural gas down 5% this morning. You can see it gapping down, making some new lows, and crude oil down 22%. Now we've officially started an oil war. It opened 25% down. I talked about this in a radio interview, and I've talked about it with you guys many times with our long-term views, that our long-term view for crude was $26, $27 a barrel. That's where the major support is. And today the markets came down. The low, they were down in the 27 range, which is unbelievable that it happened in one day. This should have taken a few months or several weeks to get there, but instead it happened in one day. Russia's keeping production up. The Saudis are giving out huge discounts, $7, $8 discounts to their clients, and they're talking about flooding the market with lots of oil. They want to suck up all the market share, take all the clients, and keep the price of crude down at $20 or $30 per barrel to really choke out North American oil companies and their clients, the companies and their contracts. So more or less, we could be in this oil war for a while. I mean, we could see really cheap gas. That would be the upside. But overall, this is a full-out war on the U.S. and Canada in terms of the energy sector going forward here. Last but not least, let's take a quick look over at, actually, we'll look at Bitcoin and also the U.S. dollar. Here's Bitcoin. Bitcoin, big gap down yesterday, continuing to move down today. Overall, it's down 14%, big drop. And we're just seeing really fearful money. Money is just leaving the market. People are going to cash or they're going to bonds. Here is the US dollar index. You can see this complete washout in the dollar. We were talking about it up here that if the dollar was going to sell off, we should see gold rocket higher. And what's crazy is the dollar has completely collapsed and gold hasn't even budged. So either gold's being held down by manipulation. I'm very surprised this drop that we've seen in the dollar hasn't caused metals to really take off. But overall, you can see this down day today in the dollar, another big down day, and it just continues to be under pressure. Now, obviously, it's getting oversold. If we were to zoom way out on the chart, you can see we're starting what looks to be a bear market. We're getting to this point here where we've got, you could argue, a shoulder, a major head, a big shoulder. We got a neckline across here. This is a big trend that's been going up for a year and a half, and here we are today breaking through that level. I wouldn't be surprised if it catches some ground and comes back up and eventually works itself down and continues to go. But overall, this is a lot of damage being done today. So overall, we could see a bounce in the dollar at some point, but this could be the start, or this looks like the start of a new big downtrend for the dollar. And when the dollar does, on average, is going to be moving down, this trend becomes defined. That should send precious metals much higher. As the dollar falls, the metals will go up. So huge price action today going on. I put a bunch of info in the morning written report and cover most of this, but it's going to be a rough ride. We are in cash, thank God. We just continue to let the market do its thing. We'll be looking for some good setups. And, most people are down 15, 25% on the year. We're positive, and we are sitting in cash, which is the best angle to be right now. So talk to you soon. Bye-bye.